welcome to the weekly mortgage rate update for the week of September 5th, 2016. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week we saw mortgage rates end the week slightly higher than where they started at the beginning of the week, as mortgage bonds did sell off to end the week. If you take a look at the bond chart on the screen, you can see that on Friday there's a red candle, and there's a small red line going up from that. That means the bond was actually higher during the day, but then ended the day by selling off and closing down. So what happened was on Friday we got the jobs report. When it came out, initially mortgage bonds reacted favorably and spiked up, but then the stock market rallied and the bonds sold off. Now we're in a tight trading range. We're right there between the 50-day and the 25-day moving average. They've been converging, and we've been trading in this tight band for the last couple weeks, and we were hoping that mortgage bonds could break out of that after the jobs report, higher or lower. They really haven't done that. We're kind of sitting right there at the 50-day moving average, so we're going to recommend floating your mortgage rate to start the week, hoping the bond can break above the 50 and the 25-day moving average and break higher. But if it closes down and breaks below that, we'll quickly switch to a locking stance. But go ahead and float your mortgage rate to start the week. Now, in economic news, big report on Friday was the August 2016 jobs report reported by the Labor Department. It actually was disappointing, showed only 151,000 jobs created. They were predicting 180,000 jobs. So as we said, that ended up being bad for mortgage rates because the stock market actually rallied on the bad report, anticipating that the Feds will not raise the Fed funds rate in their meeting in September. It was looking that they might do that, but they're thinking with this bad jobs report, the Feds may not raise it. So the stock market rallied, thinking more longer-term easy money. And then we saw the unemployment rate was 4.9%, which was higher than anticipated at 4.8%. But so a little bit weaker jobs report, but it was still not super bad. It was kind of steady for most of the stuff. Wage growth was 0.1%, so it was actually up. Then we saw weekly initial jobless claims come out on Thursday. They came out at 263,000 claims for the week, up 2,000 from the previous week. That's a solid number. It was below expectations, 265,000. So the labor market story is pretty much the same. Companies are holding on to good employees and firing less. And then in the housing news, good news there. We had the Case-Shiller Home Price Index for June 2016. It showed an increase of 5.1% in home prices on the national average from June of 2015. Slightly down from May's increase of 5.3, but right there, steady appreciation at the 5% range. That's definitely good news, meaning housing is still a good investment. So if you're thinking about purchasing a new home or investing in real estate, now's the time to do it. Interest rates are ridiculously low, and housing market is still strong. We saw again another report, pending home sales for July 2016, was released last Wednesday. It showed a solid 1.3% increase in pending home sales from June to 111.3 million units on an annualized basis. Now remember, pending home sales measures the number of new contracts signed to purchase existing homes. So this was the second highest reading in the last 12 months. It's a very good forward indicator. So with that good news, we're looking at homes being sold in August and September to be a very good number because of the high pending home sales. So again, great news on housing. Definitely a good time to buy. So if you're looking to buy, the next first-time homebuyer seminar is Saturday, September 17th. That's in Newark, Delaware, from 10 a.m. to noon. You can register for that event by giving us a call at 302-703-0727, or you can register online at www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.